Welcome to today's market report. European stock markets edged higher on Wednesday, with the luxury sector impressing as the first quarter earnings season begins. DAX in Germany traded 0.1% higher, CAC 40 in France rose 0.3%, FTSE 100 gained 0.1%. The move was also supported by falling bond yields in the U.S., where inflation concerns eased after March CPI data overshot expectations by an insignificant amount. The U.S. Consumer Price Index rose 0.6% in March, the biggest increase since August 2012, but the market had seemingly positioned for a strong figure as rising vaccinations and fiscal stimulus released pent-up demand. This CPI number is unlikely to change Federal Reserve Chair Jerome Powell's view that higher inflation in coming months will be transitionary. The benchmark 10-year U.S. Treasury yield dropped as low as 1.61%, partly as a result of that, and partly because of other news that put a dampener on economic reopening trades. Johnson & Johnson has delayed the rollout of its COVID-19 vaccine outside of the US after the US federal health agencies recommended pausing the use of the drug due to blood clotting worries. This is the second vaccine after AstraZeneca's to have such issues and may further delay the EU's vaccination program, which may in turn delay a return to economic normality. Germany, which has still vaccinated less than 25% of its population, extended its lockdown by another 3 weeks on Monday. In the corporate sector, LVMH stock climbed 2.8% to a record high after the world's biggest luxury goods company posted a strong start to the 2021 as the Chinese and U.S. shoppers returned in shops. Christian Dior stock rose 3.1% after reporting an 8% rise in sales, which also helped rivals Kering and Hermes higher. SAP stock rose 3.4% after the German software giant raised its 2021 revenue outlook, while plastics company Covestro rose 2.4% after the plastics company lifted its profit outlook. On the flip side, Tesco stock fell 3.2% after the UK supermarket chain reported a 20% drop in full-year pretax profit, while Credit Suisse stock fell 1.9% as the banking giant continued to unwind positions related to last month's meltdown of Archegos Capital. Oil prices pushed higher on Wednesday after industry data showed U.S. oil inventories declined more than expected last week, a sign of growing demand in the largest oil consumer in the world. The U.S. crude futures traded 1.4% higher at $61.05 per barrel. Brent contract rose 1.3% to $64.48 per barrel. Gold futures fell 0.1% to $1,745.20 per ounce. On the FX front, the GBPUSD pair is extending the upside momentum in the early European session, touching the highest level in 3 days near 137.75. GBP is riding higher on the optimism surrounding the stage 2 of lifting lockdown that began on Monday. On the economic data front, the UK GDP rose by 0.4% in February, missing the market consensus of 0.6%. However, investors struggle with downbeat data and remain optimistic about future growth as the restrictions being eased would result in the peak of economic activities in the coming month. GBPEUR edged higher while moving in a narrow trade range in the early European session. The cross peaked at 115 before reaching the intraday highs of 115.20. A combination of broad-based euro buying and news that Bank of England chief economist Andy Haldane would be leaving the bank's monetary policy committee were said to have been contributing factors. Haldane has proven to be hawk on the MPC, being favouring raising interest rates on account of his optimism for the UK growth rebound in 2021, given that a hawkish central bank is one that is associated with currency strength. News of Holding's departure was credited by some economists to another bout of weakness in sterling exchange rates. Sterling as well as gilt yields have dipped slightly, although not significantly, on the news, implying that the market judges a slightly more dovish tilt to the MPC once Holdings leaves. Holdings' views on the economy were cited for bouts of strength in the pound in February, saying economists and markets could be guilty of underplaying the extent of looming inflation in the UK. Euro-dollar prints 0.1% intraday gains while easing to 119.58 ahead of Wednesday's European session. Although broad US dollar weakness could be cited as the major theme behind the quote's 3-day run-up, amidst dollar index falling to 91.68, the lowest level since 22nd of March. This is today's market news. Thanks for listening. We'll see you next time.